When you look at the economic diversification, one way that you can do this, and we heard this from Ahmed Al-Sayegh earlier today, is there's also been a focus on financial services and building a financial ecosystem in the Middle East. We also heard from Waleed when he spoke about Abu Dhabi Catalyst Partners and the work that they're doing on the seeding front. So just to expand that discussion slightly for our penultimate panel of the day, and I would like to give a very special thank you to Yazan, who is going to be our first person on the stage today I think he's either going to be in a wheelchair or on crutches. So he's still here today despite the fact that he has had an operation. So please do give him a big round of applause when he comes out. But for our final or penultimate panel of the day, driving prosperity, how to build a financial ecosystem, I would like to welcome the moderator, Simone Foxman, who's a correspondent at Bloomberg, and her panelists, including a big round of applause, please, for Yazan as well.
Well, thanks, Rachel, first up, and thanks, Yazan. He has actually a pretty exciting story having to do with, large animals and things like that. Normally, whenever I've broken a bone, it's always been tripping somewhere. So it's a good story, at least. So find him later and ask. Well, I'm very pleased to be with you all today. My name's Simone Foxman. I'm a correspondent for Bloomberg News. And over the next half hour, we're going to talk about building a healthy, prosperous financial ecosystem and the kind of elements that go into that, the forces shaping finance around the world. And we have a lovely panel to do that with you today. And instead of reading you what's in their bios in the booklet that you've received, which is lovely, I'm going to actually have them start by introducing themselves. So, Yazan.
Sure. I'm the one who fell off the horse. So, my name is Yazan Abdeen, and I'm the CEO and a portfolio manager at Abu Dhabi Investment Management. We're an asset management boutique that's based in ADGM and regulated by the Financial Services Authority. We manage investments in Middle Eastern capital markets, predominantly in equities. So we are the people that are exposed to daily volatility associated to everything that shows on Bloomberg.
Guy.
My name is Guy Hurley. I'm the CEO of Catalyst Partners. It's a business mandated to build out the ecosystem of the ADGM and to back companies looking to set up in the ADGM.
Bob, please.
Bob Diamond. I'm the co-founder and chief executive of Atlas Merchant Capital. Prior to that, I spent most of my career with Morgan Stanley and Barclays, and most of it overseas.
Bob, I want to start with you. You have a theory about how the financial world is changing globally. It's changing from global institutions to regional players. I think this gives us some really good context to start off this discussion.
I think the most lasting impact of the financial crisis over 10 years ago now, it's hard to believe, was the recognition that no elected official, never mind regulators, no elected official ever wants to be seen to be sitting in power when there's a too big to fail situation. So the larger interconnected banks, from the strong ones to the weak ones, are going to have buffer upon buffer upon buffer of capital. The regulators are going to want them to reduce risk. They're going to want them to focus on client businesses rather than proprietary businesses. And while we will have large interconnected banks, this will be an oligopoly of the institutions we know. Below that, that 3-decade race to global, 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 universal, 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 today is much more around national and regional. It's much more around being focused and selective on the products that you're offering to clients. And it's much more around ensuring that your return on capital is above your cost of capital. And so, particularly sitting here in Abu Dhabi, I see a tremendous opportunity for the local financial institutions to play a much bigger role, not just here, but in the region as well.
Now, Guy, you see large asset management firms, large banks come through the region. is the outlook that, yes, we're going to see a stronger regional players here, or do you think that this, potentially Western banks minimizing their operations, not wanting to be too big to fail, do you think that this just creates opportunity for new players, new forces?
Crumbs. That's a big question. The drive of the big global players to come to Abu Dhabi isn't necessarily there, from what I've seen. They have big bases in London or New York or whatever. They don't need to be here. With the internet, financial products are very transportable. In the old days, you needed to be within the square mile to be near the Bank of England. Those days are gone. You can be anywhere these days and trade any market you want. What we are seeing is, as the banks generally retreat because of all the issues Bob's raised, that there are significant opportunities in things like structured lending, where the banks have really pulled out, and there's a vacuum. And what we are seeing is an increasing urge for trade finance and structured credit. And we're seeing entrepreneurs coming to Abu Dhabi and looking to set up in Abu Dhabi in order to fill that gap in the market.
Now, Yazan, you invest in some of these players. What do you see? Are there holes in the financial market, or do you see a market that's substantially overbanked in some ways?
Right, so there are two angles into this. The first angle is that the change that has been happening over the past 20 years has been enormous, whether it's on governance, whether it is on recognition of non-performing loans, or how banks make businesses. In 2005 to 2011 era, the majority of the profitability in the banks in Saudi, for example, came from brokerage, not actual lending. So one of the largest banks in reality was a brokerage firm. Then you had the financial crisis and the recognition of how non-performing loans could erupt in a banking system. I think there is a major shift, and there is a difference between banks in the region. So Saudi Arabia is a totally different story than UAE, is a totally different story than Egypt. And you can look at it simply from loans to GDP. The loans in the banking system in the UAE is around 100% of the GDP, while in Saudi Arabia is at 60%, Egypt is 40%. But there is a reason. If the Egyptian banking sector increases its lending, the default rates increase. And that doesn't work when the government takes the bank's money and pays it 15 or 16% on it. So it has killed the lending mechanism of the banking sector, while in Saudi Arabia, SAMA is a very tough regulator. And the risk tolerance is very low in the banking system. As much as the government has been pushing the private sector to borrow and to grow, the banks have been sitting on the side. While if you want liquidity at some point, similar to what's happening right now, liquidity erupts. The banks could provide enormous amounts of leverage. UAE has been a different story. It's an overbanked market. It went through the cycle of non-performing loan creation and then recognition, and now it's going through consolidation.
But it sounds like also, Guy, what you're talking about is that there are substantial areas that are sort of underserved in some respects, partly also potentially because, limited presence of other asset managers here. Does this create, what kind of difficulties does this create, and how does this sort of affect the day-to-day profitability of, say, companies seeking loans, trying to move forward?
The financial center we build in Abu Dhabi is going to be different from the financial centers you've seen elsewhere in the world. New York has America, London has Europe and the relics of empire and foreign exchange and insurance. Singapore and Hong Kong have China. Cayman, Dublin, Luxembourg are booking areas. Abu Dhabi will have its own identity, which will be a reflection of its position, stuck halfway between Africa and India. And it means it's a trading center, it's a logistics hub, and the development of the financial center here will be a reflection of that position. As people have already mentioned in this conference, 80% of the world's population is within an 8-hour flight. This is the center of the world. You can talk to Japan in the morning and California in the evening. So the way the center will develop won't necessarily reflect traditional banking. It'll have its own identity and its own personality, which will be reflective of the geography.
I see. You know, this is a question that's always concerned me when we talk about moving towards a more regional model of banking. You know, particularly in this region, you know, there is one substantial exogenous shock that, you know, can always shock the market and that's oil. But certainly that's not just a Middle East focused problem. You know, you see a hurricane in the United States, in certain areas of the United States, or in Hong Kong. We see protests. You know, does this movement towards regional centers, does it create the possibility for you know, a spoke in the wheel that Guy talks about to sort of fall out from underneath us?
Not in the Middle East, and here's the reason. As you look at the key financial centers around the world, you start with, is it there for the local markets, or is it there for the international markets? The best two examples are probably Tokyo is a thriving financial center, but it's basically all yen. It really doesn't have foreign flows going through Tokyo. On the other hand, Hong Kong has very little domestic business. Most of it is international flows. And then you see New York, which is the biggest single capital market, the dollar-based capital market, and has somewhat of international flows. Well, here in the Middle East, to the extent that Abu Dhabi is as successful as we believe they will be, it's really not going to be as much around the local economy as much as it is around the sovereign wealth funds of Mubadala, ADIA, and others. It's about their access, as Guy said, to this region. I would have North Africa, and Africa is very important in that regard. So I really think that this is potentially a slightly different paradigm than we've seen before in terms of being a regional champion, and then finding the focus and selectivity around key areas where they can truly add value. And they're likely to be, in my mind, areas like asset management, areas like wealth management. It's unlikely going to be large banking flows.
You mentioned asset management, wealth management, and that's partly an issue I guess we've discussed briefly in a call before this panel, which is that a lot of the money here leaves and seeks a new home. You know, Guy, I know this is sort of your baby in trying to bring those asset managers here. What are you doing to make that happen, and what would help you make that happen?
Well, I think you have to look at asset management in a very broad sense of the word, and it isn't just about buying a few stocks and a few shares. And I think, in as much as it ever did, passive investing and ETFs have really eaten into that. So you're looking at stuff which has real relevance to the area, but also consequences of the ecosystem. And I think aircraft leasing is very, very interesting. Whenever there's an aircraft lease, there's a bank loan. There's a special purpose vehicle which fits in with the ADGM. There's a administrator. There's a fiduciary, a transfer agent. The whole thing. Lots of lawyers, lots of accountants. So the whole thing echoes through the system. So there's lots of impact from an aircraft lease. Now, if we get one aircraft leasing firm here, that's great. But actually, no one really cares. You need 5. You need to have density amongst the people who are here. You need to have specialization. And you need to create a destination where people want to come in order to buy those services.
Yazan, what are your feelings on this? As an investor looking at the market opportunities out there.
See, I mean, reflecting on what Guy said as well. This is in my career. This is the 3rd asset management business that is focused on Middle Eastern equities that I've been part of teams that build through 3 different regulators. And the difference with this regulator, out of the experience that I'm going through, is the platform that has been mentioned. It's that proximity. We usually invest on that thematic view in logistics. So when we look at port handlers or transferring or transporting companies, this is what we're betting on. The Middle East, as it's said, 1/3 of the global trade goes through the Red Sea. But today there is this opportunity that you have a regulator, you have a market, that its business model is about bridging. If I incubate myself as an asset manager, as a specialized asset management boutique that claims that we know this part of the world, then this platform gives me that kind of exposure. Unfortunately, during the past 18 years, part of my career, I've been trying to pitch investing in Middle Eastern equities to international investors. We were not appearing on the global screens, from a classification perspective at least. So if you would go to a huge US endowment and you would ask them to give allocation to MENA, if you are lucky, they have a 10% exposure to emerging markets equities. You don't appear. Now this is changing. The whole region economies are changing. The drive behind exposure, the drive behind bridging, and attraction of capital. Historically, we've been known as a wealthy part of the world where sovereign wealth funds are created, and international asset managers could send their suitcase banking people to come and raise money from this part of the world. Today, there is a different business proposal. Today, we are a region that could connect the world, and we could actually say a story of investing in this part of the world.
Well, to that end, and potentially why an allocation may expand to the Middle East has to be what's in the news right now, and that is Aramco about to go public, to start trading tomorrow. Yazan, would you invest?
Would I, sorry?
Are you going to invest? Are you going to buy shares?
We have invested in the initial public offering, and I believe that the story behind Aramco, I'm sorry to borrow your words, but it's going to be around changing who we are. This is the largest company in the world, the largest company in the region. Its valuation is 2 times the size of the GCC economies combined. If the stock goes up by 10% tomorrow, it will create 25% incremental market capitalization to the region.
So it sounds like what you're saying is that, it'll simply be a very large or a relatively large piece of even in large institutions.
The interesting part about Aramco that it's a huge company, but it's very easy to analyze. It's a company that produces oil. We know the cost of taking oil from the ground. We know the capex or the maintenance capex associated to it, and then you can derive the profitability of the company. It's an unleveraged business. The whole issue about the Aramco valuation range that has been trickling to the global economy is that you can value Aramco at $4 trillion if you would use its reserves, similar to ExxonMobil, or you can value it at $900 billion if you're looking at its free cash flow. But it all has to do with the amount of yield that you're requiring or the required rate of return for the investment.
Bob, I want to ask you, as an investor looking from afar, saying, wow, there's this big company coming into the market. Does it make the markets more liquid to you? Does it make you any more interested in potentially investing in the region? Or is that not even on your radar?
So we're not focused on oil at all.
Right.
So that's probably unfair to comment on that. But I think everyone is watching how this impacts the region, given how much of it was acquired in the region versus the global markets, et cetera, et cetera. So I think it will have a big impact and people will be watching. But I'm not good to comment on the oil markets.
Fair enough. Guy, I want to get your take as well, since it is the news of the day. Does this matter at all to the argument that you make?
I have 2 observations. One is that the significance of the Aramco float is much more about the cultural impact and the change going on in Saudi Arabia than it is about whether it's this price or that price. And I think it is a symbol of the change. My second observation is really about MSCI and the huge impact they, as the index calculator, have had on the region. They decided Saudi Arabia was now a market that should be included in benchmarks, and suddenly money's poured into Saudi Arabia. The Aramco float and the enormous capitalization will again impact MSCI and will naturally lead to flows. And the irony is the real power is actually with MSCI, a completely unregulated entity, which has a fantastic business model. But they're the active decision maker here.
Yeah, and that's not just here. It does seem like emerging markets across the world, or even developed markets that just happen to be a piece of, a smaller piece of MSCI, are just very much at the mercy of flows of decisions that they don't necessarily have a say in. Yazan, would you change that at all if you had the ability to take a pen and
It enables the conversation. So again, when you're talking to this Japanese institutional investor or US endowment or pension fund, when Aramco or the Middle East is 5% of emerging market equities, then it's a sizable bet. Emerging market managers would not tolerate the tracking error associated to it, particularly if there is volatility, and we're famous for volatility. So this is the first part. That's why you saw Saudi valuations in the past 12 months moved by 3 standard deviations, unprecedented. And then it went back again.
Yeah, exactly.
Naturally. But this is what passive flow does to the market. It makes it exuberant, it makes it unrealistic, and then it paves down. It happened in UAE, it happened in Qatar before. But also it does something interesting. It opens the eyes. So on the long run, especially now that they're activating mechanics of longing and shorting in the market, it should be able to reduce the market volatility. It should be able to reduce the retail investor effect on the market. So the fear, the greed, extreme movements should behave in a more systematic way, I would say.
I want to change gears a little bit. One of the large themes that I have seen since I moved to the region in July has been what's next after energy, or even as a continuation of energy. What else are we going to build our economy around? And one of those things has been technology, potential venture, startups, things like that. Bob, I know you invest in some interesting financial technology companies. I want to get a sense, before we dive into this region, what you're looking for in an environment where, say, there's a lack of something. What do you look for when you invest in these companies? What's exciting to you? And then we'll turn a little bit more regionally focused.
Well, within financial services, technology is dominant right now. And I think if you have a regulated entity with strong technology, that's a strong recipe. In terms of this region, Simone, one of the things that I think about is that in the next, sort of beyond oil, as you say, what's next? One of the things that's next, but it's only one, is financial services. And it's typically been, within the GCC and other areas of the Middle East, a very domestic product. And here, and in Saudi Arabia, you're seeing a concerted effort to consolidate and clean up insurance and banking. And I think the step that I think would be very interesting is when we would have outside investment coming into the region for their financial services, rather than people like me coming to the region looking for capital to invest outside. And I think that would have a double whammy. I think it would help accelerate the efficiency of the financial services industry. I think it would add things like technology, but most importantly, it would bring talent. And so I'm not sure if it's time now, but I do look forward to the day where in Abu Dhabi and in some other areas of the Middle East, they begin looking for outside investors to come into their banking and insurance industry. And we're ready when that happens.
You're ready, okay. Guy, are there things, what do you see as potential impediments for growing, I guess, new technology companies or new companies of any sort here or around the region?
Okay.
I know that's a big question, frankly. I came at
Obviously, technology is changing everything, but I'm reminded of the words of the French billionaire Bernard Arnault, who runs Louis Vuitton Moet Hennessy, and he said, there might be a groovy piece of technology which turns up this week or next week, but 100 years from now, people will still buy Louis Vuitton handbags, and they'll still drink fantastic champagne. And technology, the cycle's so quick, the pace of change is so quick, and I don't necessarily believe that I have the skill set or the sophistication to capture that. But we are very conscious of the way technology is changing some of the opportunities that we're investing in.
But in terms of bringing in private investment, investment that's a lot of...
In terms of bringing in private investment, I mean, a lot of the raison d'etre behind what I'm doing and what Catalyst Partners are doing is effectively to reverse the flow of fees. We want money to be managed out of Abu Dhabi. Now, it won't necessarily be invested in classic stocks and bonds because that doesn't actually create much of an ecosystem. A bloke sitting in the corner trading stocks doesn't really create that much impact. But businesses that are financing shipping, financing aircraft, doing structured lending. I was talking to Bob last night about a diamond bank, funding the flow of diamonds out of Botswana through to Mumbai. It's trade finance. That kind of stuff is really interesting and very tangible, and it isn't going to come or go out of fashion overnight. And when you build an ecosystem, you want to try and build something that's going to last for decades, and where there's a chance for each year to build upon the foundations of the previous year. And technology is all about what's going to work next week, next month, next year, but you've got to think in terms of decades. And building an ecosystem, one of the guys earlier on said Silicon Valley's taken 60 years to get to where we are. The ADGM in Abu Dhabi and building an ecosystem will take, hopefully not 60 years, but it's a question of decades. So the impact of technology today it's ephemeral and momentary.
Well, is your point, and is it fair to say that your point is, there's this, I guess, love and obsession with technology when some of the more interesting business models already exist? Would that be fair, or could be created? Would that be fair to say?
Well, I think my point is that technology is very, very exciting, but it comes and goes with remarkable speed. Nokia was knocked out by the iPhone, and at some stage, someone else will come up with a killer piece of technology that will change everything again. And I'm not smart enough to work out what that's going to be, but I do know that aircraft will fly, ships will sail, companies will need financing, irrespective of what technology wave comes along next.
Yazan, I know we debated a little bit before this session began. Even the idea that there would need to be something else, something else in the future, that the next technology perhaps is just an evolution of what was already a technology, which was oil in and of itself. In terms of finding more businesses to invest in, if it's any new sector, what do you think it's going to be?
See, I think it's inevitable. So yes, trading stocks creates wealth, creates value, but the reason for capital markets creation is to preserve wealth, is to find solutions for liquidity, is to provide funding for companies at different stages of their evolution. We are stewards of capital. Our role is to be able to do the matching, depending on the risk profile of the investor. The emergence of new sectors, of technology, has to do, in my opinion, currently in the GCC, what we are calling even the new GCC, the new rhetoric of direction. Abu Dhabi announced that Abu Dhabi wants to celebrate the last barrel of oil. In Saudi Arabia, it was announced that he wants to break the addiction to oil. These are general statements, but if you were to analyze them, if you look at Saudi Arabia as an economy, the addiction to oil is not only about people and the subsidies they get in petrol stations. It's about the contracting sector that is dependent on where the government is spending money and just following to make their margins. It's even on the consumer level, providing subsidy to them on electricity that they go and spend by buying extra discretionary or non-discretionary items. This has been challenged. This has been disrupted. Today, there are new creations that are taking place. Look, 12 months, the entertainment sector in Saudi. Now you have the Riyadh Festive that's going on. Global events are taking place. It is a big employer, and that was a problem in the Saudi structure, that the largest employer in Saudi is the government. Today you're seeing that there is a new sector that's being created. Now, how much technology you need into this? This is the second question. Egypt is 100 million people that IPO'd a company that does electronic payment 3 months ago. The valuations that you incorporate at 100 million people is different than when there are 2 million people that are using it. This is, in my opinion, when it's changing in our region. We're focusing on private sector. We're focusing on the change of the game rules.
I want to ask one final question, very quickly, because we're almost out of time. I want to know what keeps you up at night when you think about the global financial system. So, like, in a tiny sentence, Bob, start me off.
Two things. I worry about the trade wars.
Okay.
I particularly worry about U.S.-China. And within that, I see a continued growth of trade with China from here in the Middle East, from Japan, from Europe, I want to see a resolution to the trade wars between the US and China. I think it would be very healthy for the world. The second one that keeps me up is I worry that since the financial crisis, doing all the right things in terms of monetary policy and quantitative easing, we've ended up with 17 trillion in negative interest rate bonds, which is very, very bad for the system. And we have ended up with over twice the credit outstanding that we had when the financial crisis hit. So I do worry about the weaker end of corporate credit around the world.
Guy?
I spent years as a foreign exchange trader, and I'd be up all night watching dollar yen go up and go down, being terrified. And what I learned was sleep is really precious, and to never ever stay up at night and worry. What you have to do is create structures and create exposures and create positions where you're already comfortable with the consequences of failure, and you can live with it, and you've priced that in. And thereafter, the world will evolve the way it's going to evolve, and there's nothing you can do about it. You're not in control. All you can be in control of is the way you've structured your positions and already been prepared for the worst possible outcome.
Yazan, last word.
I worry about regulations. This is one of the largest risks that we have in frontier markets or in emerging markets. And now with the emergence of the new economy, I worry about the relationship between optimism and pessimism. People are naturally, their first reaction is a pessimist reaction. I think with the change that's taking place, we need that leap of faith.
A leap of faith. Well, thank you all so much for joining us. It was lovely to have you here with us today.
Thank you.